Everyone keeps talking about the Pokémon cards bubble. But are we actually in a bubble? And if we are, what are the risks of it popping? In 1999, a regular pack of Pokémon cards used to cost just between $3 and $4. Today, a single card from that era can fetch hundreds of thousands of dollars, while some modern cards sell for less than the cost of a lunch. And what about the market? The trading cards market, which includes Pokémon of course, is now estimated at $21.4 billion in the US only. In this video, we'll break down the economics of the phenomenon, the risks, and I'll show you actually how Pokémon cards outperformed traditional stocks. The Pokémon franchise is a cultural juggernaut. Launched in 1996, it has become one of the most successful media brands ever. Beyond video games and cartoons, it sparked a boom in the trading card business. Between April 2024 and March 2025, the Pokémon company printed 10.2 billion cards, though that's actually down 14% from the prior year record. Meanwhile, the 2024 market estimate of $21.4 billion is projected to reach $58.2 billion by 2034, and this suggests big appetite from customers. So what changed? Why are people paying big for cardboard again? And is it sustainable? But why the bubble ignited? And what is the current demand for Pokémon cards? There are many factors that can be mentioned for how the bubble ignited. So I'll mention the one that in my opinion are the key ones. First, nostalgia. People my age used to love Pokémon. Millennials who grew up with the original base set at the time now have disposable income and are buying not just to play, but also to invest. Second, pandemic stimulus and spare cash. If you think about when the bubble started, it was around during COVID-19. With central banks pumping stimulus during the pandemic and lockdown giving people new time and more money to spend, many turned to collecting and speculative assets, and Pokémon cards actually became a speculative asset. Third, rare card mania plus influencer hype. When high-profile purchases hit the news, for example, think about the Logan Paul purchases, this drives interest in normal buyers like us. But clearly now we're referring to old Pokémon cards. But what does demand entails for new Pokémon cards? Well, actually, the Pokémon company printed 10.2 billion cards in 2024-2025, which is a fewer number than prior years, which indicates a slight slowdown in the market. This is a sign that modern sets flood the market, making scarcity weaker for many cards, while it remains a great strength for older cards. Let's talk numbers now. How do Pokémon cards behave as assets instead of as collectibles? A recent headline claimed, Pokémon cards have a cumulative return of 3,821% since 2004, vastly outpacing the S&P 500 483% over the same period. So yes, for some vintage cards, the returns have been spectacular. But let's compare old versus new. A 1999 Charizard PSA 10 sold for $270,000, while a modern Charizard EX 2024 release, for example, may only fetch around $400 if PSA 10. So in short, vintage equal astronomical returns, modern equal moderate return. Let's compare it now to traditional assets though. The S&P 500 over a long period of time may return a few 100%. It is more appropriate to compare Pokémon cards to alternative assets like fine art or real estate, that though often require a large capital and low liquidity, which is not the case for Pokémon cards. Thus, some investors that are used to invest in alternative assets are now investing in Pokémon cards, which are way less capital intensive. At the beginning of the video, we asked ourselves, are we really in a bubble? Well, the economic framework of a speculative bubble fits this market well. First of all, rapid and sustainable price growth. Rare cards skyrocketed in 2020 and 2022. Now we're seeing signs of a plateau. Secondly, the behavior of the buyers. Many buyers are speculators, buying because they believe someone else will pay more later. Third, the story-driven demand. The next Charizard will 10x. Cards are the new Bitcoin. Narratives dominate fundamentals now. We talked about market fundamentals, so let's have a look at supply and demand. From a supply side view, the product is scarce at the top, for example vintage PSA 10s, but abundant at the bottom, for example modern prints. If there are too many boxes and too many cards, even the high-grade modern suffer. From a demand side view, on the other hand, if underlying demand from actual players and collectors falls, speculator alone cannot sustain the prices. Rising interest rates and inflation can reduce speculative money available. So you end up with something where some parts may actually hold value, like for example key vintage specimens, while the broader market is actually very fragile and most likely unsustainable. So here are some warning signs we are already seeing about this bubble probably bursting. First, production. Production is still massive. 10.2 billion cards printed in 2024 and 2025. While that's slightly down from previous year, it remains enormous, while the collector actually wants scarcity. Second, entry-level modern cards dropping. 2024 Charizard, for example, as we mentioned, if graded PSA, so a high grade, fetched around $150 in mid-2025. Third, the liquidity issues. The super rare vintage cards trade, but many graded cards sit unsold or with wide spreads. Fourth, macro headwinds. As interest rates rise and speculative flows dry, collectible tends to suffer first. So at the end of the day, while the market is not dead by any means, the easiest gains are likely behind us, and the risk of a sharp correction is real, especially for non-vintage high supply segments. Let's not be overly dramatic here. With all that we've said, it looks like Pokémon market is about to die, but that's not true at all. There actually is a rationale in staying in this market. The franchise has staying power. For example, if you think about 2023 retail sales of the brand, these amounted at $10.8 billion, and Pokémon ranked among the top global licensors in 2024. Vintage graded cards, for example PSA 10, first edition, shadowless, etc., are extremely scarce, and scarcity matters in collectibles. Collectors driven by emotion, for example we mentioned nostalgia, are long-term buyers, not just short-term speculators. Some platforms, fractional ownership for high-end cards, treat these cards like alternative asset shares, blending finance and nostalgia. So at the end of the day, if you're buying into old, vintage, high-grade Pokémon cards collectible, you can treat them as fine arts or fine wine, so you're actually a conscious investor. If you instead are buying on more modern cards, thinking about short-term gains, well, this is a speculation that has much more risk into it. So we have extensively talked about risks if you buy into modern cards. But what are these risks? Well, basically, in a nutshell, it's like buying a painting that can be printed over and over again. So first of all, the liquidity risks. Unlike stocks, selling a vintage graded card can take months. You may have to accept a discount. Secondly, the oversupply risk. As I mentioned, modern prints run are massive. Even graded cards lose scarcity if many copies exist. Third, value dilution risks. If more and more people view these cards purely as investment, not collectibles, the narrative may collapse. Fourth, authentication and grading risks. Fake or manipulated cards grading scandals can hit trust and valuation. And finally, the macro risks. With rising interest rates and shifting speculative capital, alternative assets often reprice downwards first. In purely economic terms then, modern Pokémon cards have zero cash flow, high volatility, and uncertain residual demand, which makes them a far riskier investment than bonds, stocks, or real estate, for example. So what's the takeaway? The Pokémon card market has had an explosive run. Some vintage cards have produced returns that dwarf the stock market. The total market is now measured in tens of billions of dollars. But we need a reality check. The bubble-style dynamics are in full view. Some cards may still hold strong premium value, especially ultra-rare, vintage, and high-grade. But many others, especially modern print-heavy cards, are far more speculative and could suffer significant downside. If you have enjoyed this video, don't forget to leave a like, subscribe, and leave a comment below. And see you next time.